So I record it twice. I record it with Snagit, which I just started, which is my go-to because I don't have to do any conversions, and then I'll do it to the cloud within Zoom. All right, so we're going to go ahead and get started. This is Jeffrey Scott, and thank you for joining my webinar tonight. If you are watching it here live, welcome. And if you are going to see this on YouTube, I hope you enjoy it. I did a similar webinar on Sunday. It lasted about 90 minutes. And I started later because it was Sunday and I wanted the folks on the West Coast. But so I figure this is till 9:30. And at about that time, my little lady wife, who is little, I'm 6'5" and she's 5'2", is going to come in here and wonder where I am because she likes to watch TV at night. All right, welcome, Simon. All right, so we're going to talk about my new tool called Market MRI Pro and how I use it for a simple approach to swing trading stocks. And for those that don't know me, my name's Jeffrey Scott, and you'll get my email address and everything as we go forward. One of my favorite people is here, who I won't say his name again so you won't know, who is an example of why people need tools to trade and need a system to trade, because he reminds me of myself when I was much younger and I chased shiny objects, and that's not how you make money. The session is for educational purposes only. Any recommendation should be considered in the spirit of education and not investment advice. The intent of the video is to demonstrate my new tool, Market MRI Pro, but really how I use the tool as a top-down trader, how I apply them to find stocks. And I mentioned earlier to some of the folks that came in early, we'll be doing one of my long webinars on Saturday for people that haven't had too much of me this week. And I'll show you how I take it from the analysis to the stock pick to the trade. And we'll talk about options like I often do. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell, be long, short, any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. You know, options are interesting. If you don't know options, and you know who I'm talking to, be very careful trading options. You can make a lot of money very fast because of the leverage, but leverage can also kill your account. So the Options Industry Council would like you to read everything that they have to explain the risk of options. I think after you watch my Saturday webinar, you might agree with me that designed correctly, options can be less risky, allow you to control more for less, and have limited downside. And I've got tools in multiple platforms, and most of you here own them in all the platforms. I've also launched a Google group called Top Down Trader. You just go to Google Groups, put in your Google ID, sign up, and then you'll get a nightly video from me, some conversation where I think the market is. I actually put something out yesterday being Tuesday, that I thought we had hit a bottom, and I'll show you why. I still think we have hit a short-term bottom. I just don't think we're done going down. If you're looking for my wealth charts video, it'll be up in the morning at stocksanddocs.com. And you know, I use more than one platform. Clearly, you're going to see things in Market MRI Pro that are going to allow me to get rid of certain platforms I've had for a long time, but I'm never going to be down to one platform. And I like some tools better in other programs. I think not better, different. On Sunday, I talked about how much I like Sagar Nandi's stuff, superiorprofit.co. One of you went out and bought it already, but in TradeStation, we have a way of combining it with the stuff that I do in an app, and I will look at it sometime tonight. It looks like Sagar is going to let Praveen, who's on the call, my programmer and partner here, is going to let Praveen try and import the same data that we use in TradeStation. And if he can, we'll have to double the price. Just kidding. But you'd have to have Sagar's tool to do that. So most people know I'm a cancer doc. So is the guy I'm picking on tonight. Been in the market since the early 90s. He was probably not even born yet. I know you were bored. I'm just kidding. I quit practicing, but your wife wasn't. In 2001, I've had multiple healthcare startups that I've sold to public companies, and because on my day job, I have to trade at night. And since the U.S. stock markets are not open at night, it means that I put my orders in based upon what I see at night. I do a lot of conditional orders. If market does this, then buy this at this price. And the minute that I put in a buy order, I put in a stop order. I'm done blowing up my accounts. And I've been teaching people how to trade one way or another for over 20 years. Um, I don't know, did my guy on the call even make it onto this paper? We actually still do research and I still get to participate in some of the cancer research work, and this thing makes my wife happy and my mom happy. Here I am, I retired from seeing patients, and I'm still getting published in big journals. This was a paper that not only did I get published this past year, it made it to the best of, and this is one of the big magazines for my specialty. I talk a lot about Ian Woodward, and Ian was probably the biggest influence on my trading. Ian also is a disciple of William O'Neill Cancelim, but he basically made it his own. Some of you were fortunate enough to get to go see him live before he died a long time ago. And what I used to love about Ian is he would say in his heavy British accent, and I'm not even going to try, that I'm not a guru, but I'll teach you to become your own guru. And I think that's the message to my mini-me who's on the phone. Don't listen to other people. Don't rely on a third party who doesn't care about your money as much as you do. Spend the time and learn how to trade and take responsibility yourself. You're smarter than anybody else that's going to manage your money, and you just got to figure out a system and how to do things. I was there. I've explored multiple educators, software programs, books, seminars, and no, that's not my son, but I could say the same thing to my son. And I learned from many of today's masters, some of which are no longer alive, but Minervini, Bigelow, Elder, John Person, Rob Hoffman, and many more. I took all that I earned, and like making a snowball, I smushed it all together and came up with my own style. And this is what I've learned from 30 years of the markets. And what you're going to see when I get into the program is the result of some hard work by Praveen. And we'll talk about Praveen and what he's done as we go through today. But Praveen was somebody who followed me, started by making indicators for me in TradingView, and then heard me complaining that I wanted a real-time scanner that could look at thousands of stocks, not shut down 12 times a day like a certain TradeStation program, and allow me to see my signals before the end of the day instead of just after hours. So my trading is top down, swing to position. I don't care about anything except daily and weekly charts. I don't have a need for hourly or minute charts. I use the daily and weekly charts almost all the time. The only time you'll see a intraday chart is if I want to have futures, just so I get a sense of what the market's doing short term. I'll trade equities and equity options. My A trade, which is one of the lectures that I do at all my meetings, is my favorite trade. It's a stock in an uptrend that pulls back to support and then breaks out on with momentum. And it's that breakout from support on momentum that I buy. In yellow is the opposite but equal. It's a downtrend that retraces to resistance and then buys on momentum down from that resistance. What we're not going to talk about tonight is position sizing and stop management. We will talk about it on Saturday. And positive seasonality is great. And that's one of the things that will be coming as a included and soon to be added feature in the Market MRI Pro. We also have a full set of indicators for TradingView, and we have TradingView connectivity. So if you don't have those and you bought the program after Sunday's program, just reach out to Praveen and he'll provision you. He knows who's bought the program because he's the one that gives you your user name and password. And I did a video tonight. It's already posted because the data is updated early. And my video was 23 minutes, and that included 5 or 6 minutes of ranting. So I can do things much faster than I ever could. And everything's the same. Nothing. I can use my PowerPoints from not 19, from 2013. Um, and I and it will be the same way I trade today. Just the tools have gotten better, and many of you have been there. And I like to spend time having fun. And as I mentioned the other day, grandkids are the best thing that God gives you because they get to go home, and they have unconditional love. And I got two. Um, Molly is actually spending time with us for a couple weeks, which is awesome. And I've got her trained. Where are you going to college? Michigan. Who's the president? Donald Trump. And I say go, and she says blue. I mean, my life's complete now. Um, I've named my boat, little boat here, Stocks and Docks. And I get to spend time with my lovely wife on the boat, and sometimes my friends. And then, as I mentioned on Sunday, this was a rough year for me. I had some major surgery. I tore my rotator cuff. A lot of things that I wish didn't happen. I think part of it just getting older. But I was sitting, I had flown up to New York and we had a private jet to come back, and I was sitting in Teterboro, and I had surgery on Friday morning. And my wife's like, if you don't get home tonight, I'm going to kill you, so I took the company jet, and I'm sitting there waiting to come home. And remember I told you I like Michigan? The new coach of Michigan came into Teterboro and ended sitting down right next to me, didn't know me from Adam, and I knew at that point I was going to be all right for my surgery because, I mean, how could I not be? I got to talk to the coach. And as people know, I've got my stuff in multiple platforms, whether wealth charts, which I think for the price and for the exhaustive features and the educators that are integrated and speak somebody's everyday teaching is a great product. TradeStation, I already called out my concern is the stability, but I've got a great tool in there. TradingView, their scanner's not up to par yet, in my opinion, although they improved it. Metastock's got a great scanner, and it has a great charting platform, and it will have my stuff in it shortly. I've already got the app. I just haven't signed off on it yet. I've been so busy with this. And then we're going to talk about Market MRI Pro. Now, I didn't mention HDSI because I want to mention it now. This is, to me, the source of everything that I do. This is a program, HDSI, that was created by, George Roberts is the proprietor of the software. He built it. But it's a vision, and it's the power of Ian. And so much of what I do came from Ian. And all the things that Ian did are built in and not automated, and you have to spend some time learning HDSI, which is the challenge. But almost everything that I do is inside HDSI one way or another. Not as easy to do real-time charts there and other things, but it's still on my desktop and I still use it. And so let's go into top-down. And when you sell companies and bankers make a lot of money, they bring you a present. And so I got bobblehead dolls, I got all kinds of crap. But I do like my bobblehead doll, and it's probably not going to last long because it's the last one I have left, and my granddaughter thinks it's cool, so she runs around the house, and it's only a matter of time before my head separates from my body. But that's okay because she's my granddaughter, and she can do whatever she wants because she can't do anything wrong. And those of you who are grandparents know what I'm talking about. So why top down? All right, Simon, this is for you, okay? Top down is looking at the market first, understanding what direction the market is going, and deciding is the market going up or the market going down. Because I don't care how good somebody is as a stock picker. If you're buying when the market's going down, you're going to lose money. Then after you decide what the market is doing, what is the best industry group? Now you can pick almost anything in the better quality stocks in that industry group. And if the market's going up and that industry group is going up, you're going to make money. All right. Another thing, and somebody was on who I know through Wealth Charts community, actually speaks at Wealth Charts. I mean, he made a comment about how when I said the biggest money is made holding positions over a longer period of time. Absolutely. You've got to have a steel stomach. I mean, somebody on this call bought a firm at a high price, watched it go down 70, 80%, and he held it long enough, he's probably made money on a firm. I won't mention who he is. Now, that is great because it went back up, but that's painful. I don't think I mean by holding a stock through that kind of a correction. But we'll look at C as a stock that I have a big position in and how I've held it through some corrections. But I have money management where I've taken profits off already, so I can deal with that. Markets are never wrong. Opinions are. And you need money management. Where's your stop? What's your target? And how much do you buy? And I always put that last comment in because I found myself sometimes thinking, man, it can't go down. It's only going up. And then it's like, it's different this time. And that's the kiss of death because after trading for a long time, it is never different this time. This is an Ian slide because in the US, and whenever you see this shield, that's Ian's Superman shield. He gave me permission before he died. Actually, my real son is supposed to be writing his autobiography in his trading style, but that seems to not be happening very fast. We played Chutes and Ladder. In England, they're less politically correct. They played Snakes and Ladders. And this is your retirement. So especially the young guys on this call, you're starting at a 1. When you get to 100, you've got what you need to retire. You're taking care of your kids and your grandkids, and you can get up every morning and worry about nothing. Who cares what they do with Social Security? You're taken care of. And then you spend your life investing and saving, and whether it's stocks, options, futures, forex, houses, commodities, and you're playing this game and you're rolling the dice and you're moving up. And then all of a sudden you land on 24 and it's a big bull market. And think 2009, 2010, just anything you buy is going to go up. And you wake up one morning and you're at 87. And you're thinking, life is great, I'm done, nothing bad's going to happen to me. And then you're just, actually you're not at 87, you're at 84 because it's a ladder up. And then all of a sudden you roll a 3, you hit 87, and you go all the way back to 24. And we've all done that. I've done that. I try not to do that anymore, but we've all done that. And that's why this becomes so hard. You get to 100, you win, and there's a lot of traps along the way. Now, what's the data to support top-down? This is old data, but I don't think anything's different. If you take smart people who are good stock pickers, and every month they pick stocks, and you look at what happens over the next month, in a strong market, and they judge the markets retrospectively, the secretary of the group, and I participated intermittently, would take down the stocks that they bought, what the price was, and then they would look. In a strong market, good stock picking, 106% return in 20 days is you doubled your money in a month. And if in a weak market, the same people sucked. So it wasn't the people and how smart they were and how good they were at picking stocks. It was the market. So that's one message. The other message here is if you get a big run in the market, it doesn't usually continue without pullbacks. Take some profits. So I will typically put a stop on at a position, and then in a good market, I'll give 2 times the risk from where I buy it to where the stop is, and I'll put a target. And when it hits that target, I may take off a third, I may take off a half. It depends on my sentiment about the market. And then I'll raise my stop to where I bought the stock at, and I'll let it run. So I'm willing to take a big pullback because I've already put profits in my bank. In a weak market, holding on doesn't always work because in a bear market, things just get worse. And you got to be very careful buying and holding. And in a big bull, you can hold for a long time, but take profits. So the market determines 50% of what a stock's going to do. The industry group is 30%, 20 to 30. That means even if you're the world's greatest stock picker, it's only 20 to 30% of the driver. I built, oh, should I say differently? I pontificated and said what I wanted, and Praveen built a tool that gives you a objective, not subjective, an objective, what we think the market is doing. It gives you an objective way to look at what industry groups are leading and an objective way to rank the stocks. And that's how I approach the market. Am I long, short, or in cash? Well, right now I raise my cash a lot. I'm probably going to buy some stuff tomorrow if the market opens up. Um, I'm not sure it's going to, and I'll talk about my thoughts on the market when I look at the program. But I do think we may have put in a short-term bottom. I said short-term. I want my favorite setups in the top industries. Now, the fun way is to ignore everything I've said and just look for the shiny objects. And I call that bottoms up. And I will look bottoms up for stocks that may not be in the leading groups that are giving me great signals. And probably a third of my portfolio, I enter 25 to a third are bottoms up. The rest come from tops down. And I use different tools to figure out what's working. This is from a book by Stan Weinstein. It's a great book. I highly recommend it. If you don't want to read the book, then buy the course on Trade Lion that he did a year ago. And he talked about cycles in a market or stages. And I read the book a long time ago and said, I bet I could create, and I actually did create the bongo with 4 or 5 of my friends. Let's see, Manu Kapadia is no longer with us. I think Gallardi was in on that. Lou Powers, David Steckler, and I think there's one other person. Oh, God, the doc from San Francisco. Well, it'll come to me later. And we built an indicator that's a trending indicator. And when I combine my indicator with a moving average, and I use a WMA, I can tell you, I can scan for stocks that are doing this. I can scan for stocks that are doing this. I don't want to buy when they're doing this because, well, I might, but I typically don't buy because there's no momentum. I want to be long here and short here, and I want to test a tool that's going to make it easy. That tool is called the bongo, and the bongo is my trending indicator. And what I'm really looking for are pullbacks and retracements. And in a pullback, the weekly bongo says you should be long, and the short-term bongo went to a sell. And as it flips to a long, I want to be, that's when I've pulled back and I'm going up again. If I want to be short, I want to buy stocks where the weekly bongo, the dominant direction's already going down, and then short-term, the daily bongo goes red, so it's pulled back or retraced in that downtrend. And it turned green rather. When it turns red again, I want to short. So here is my unambiguous, simple market timing model. There are 4 indexes here. To me, they're the major ones. The SPDR, an ETF representing the S&P 500. The Qs, an ETF representing the NASDAQ 100, which is the dominant volume and market cap of the NASDAQ. The Russell 2000 as from the IWM is the ETF, and the Diamonds, which is the Dow 30. The yellow line represents that WMA. The top thing is the bongo weekly. If the bongo's weekly is red and the price is below WMA, you're in a sell signal. So the diamonds, which were still in a buy signal here, flipped maybe, and I'll explain the maybe, to a sell signal because this week they traded below the WMA and the bongo is red. The others are firmly entrenched. Now, do you want to know why I like trending stocks? And imagine if you got a buy signal on a stock or an index called the S&P 500 on November 6th of 2023, and you just held on till you got the sell signal up here. You made a lot of money to the long side, and that's why I like this. It keeps me out of bad markets, and it gets me in and keeps me in good markets. So I always look at the weekly. This is a 13-week new high, new low, and I'm looking for extremes when the market reverses. But this is where we're at today. Now, where's the problem with the diamonds? Today is Wednesday. I got 2 days that this could go back above the WMA. A weekly signal is not a signal until the market is closed, and the close of the weekly is Friday at 4 o'clock or 4:15 by the time all the changes are made. Now, unambiguously, I can tell you the market is in a longer term sell. Now, I will look at the daily charts, and the dailies are all in a bongo as well. So we are in a sell mode despite what we saw today. Now, how do I know when a rally like today is time to buy? Well, William O'Neill came up with this thing called a follow-through day. And a follow-through day is a move greater than 1% on the major index with volume higher than the previous day, and I think it occurs starting on the fourth day after a rally attempt. Today was a rally attempt. I can't say we're in a new bull market or a new time to go heavy long until Tuesday close if we get a follow-through day. However, no one says you have to wait, and that's why I'm going to start nibbling tomorrow if we trade higher, and when we get into the program, I'm going to show you why. Here are a number of bear markets, and unfortunately, I don't have the signal because I didn't build a signal into wealth charts. But if you went out of the market here in 2002, which saw a terrific pullback, you had a couple of areas of whipsaw where you may have been out of your short positions for a couple of days, but you quickly got back in. The vast majority of the time in 08, 09, you were out of the market. Now, you don't get in the first day, but you get in pretty quickly. And remember I just said after a day like today, I don't have to wait for the follow-through day. The weekly bongo trading system is going to turn buy much before the weekly one does. 2018, 2019, this was a weird one. We crashed going into Christmas and we recovered on the day after Christmas. Notice the red bongo, you were out of the market here, first close below the WMA with a red bongo, and you got back in when you went back above it. So you avoided, you didn't know it wasn't going to look like this. No one says you had to wait, but the key was you got out. And what about 2020? That thing was over in like a snooze fest. But look at here, price dropped, red bongo, and you didn't get back in until you were about here. So you missed some of the up, but you avoided the down, and you never know what the bear market's going to do. We'll show you this in the program, but you know, I'll take responsibility. I bought something for 50 bucks. It was an Excel spreadsheet, and it showed me real time my favorite ETFs, advanced decliners, all kinds of cool things, new high, new lows, and I got addicted to it, and then it stopped working. And a lot of people bought it because of my recommendation. So I reproduced that spreadsheet. Praveen reproduced the spreadsheet in here. We'll look at this in the real-time perspective. Now, how do you know, let's say you think the market's good. How do you find, or you think it's bad, how do you find the leading or the worst sectors? Well, we made it easy, and we'll go into great detail. This was a stock that we looked at over the weekend. Why did we look at it? Because financial services was the outperforming industry group. And when I ranked the stocks in that industry, or in that sector rather, the one that came to the top was Root, and it pulled back and was breaking out. It continued to go up during the week. So we could look at the top sectors and a list of the stocks in the top sectors. I could look just at the top industry groups and see what stocks are in the top 10. Why is this top down? Because I'm only looking at the best if the market says to buy, and I'm looking at where the best stocks are living. And odds are much more in my favor than if I buy a stock in a strong market, in a strong industry group, I have a much better chance of it going up. Here's Costco. I can't wait for earnings. I don't own this in my short-term accounts. I have it in my long-term account, and I get nervous because the forward-looking PE is absurd. And maybe it's okay to be like in the hundreds in this market with growth in the teens. I mean, Costco's a special special asset, but God forbid they miss on earnings or they warn, because you're coming down here and that's a pretty big drop. Hopefully that doesn't happen. And then the ratio charts I'll show you real time is a real time tool. These are using hourly. We're going to put in daily and weekly buttons, but I'm able to look and see what's leading the market. I did this picture today, and you can't see it as well as in the program, but Staples, which ran up hard last week because the market was rotating into defensive plays, Staples has come down, utilities has come down, and real estate came down, but they really showed up big on their move up. And healthcare also was one that really moved up as the markets rotated into defensive. Now I supplement with breath tools. Those who follow me know the Hindenburg Omen. Some people think it's an old wives' tale. I think it tells me to be careful. There's never been a major market correction that was not preceded by an Hindenburg Omen. It takes two within 33 or 34 trading days to confirm a Hindenburg Omen. And we had confirmed Hindenburg Omens on the NYSE this week. Whatever. 3 out of 4, you get little pullbacks. 1 out of 4, you get the big one. And you've never had the big one without the Hindenburg. Buckets is a tool I use during the day and after hours, and I'll show you that to get a sense of the distribution of stocks within their Bollinger Bands. For people who don't know what the Bollinger Bands are, John Bollinger created them. It sort of creates a band that expands and contracts with volatility. A squeeze is when those bands contract inside of another type of band called a Keltner channel. If you consider a band has a top and the bottom, you can give a score 0 to the bottom and 1 to the top, and you can make 10 deciles between the top and the bottom. And in a bull market, those stocks are going to live in the 10th, 9th, and 8th decile. In a bad market, they're going to live in the 1st, 2nd, and 3rd decile on the bottom. And in a really good market, they're going to get above the top of the Bollinger Bands. Stocks stay within those Bollinger Bands 90% of the time. If 35 or 40% of the stocks are above or below the Bollinger Bands, and they're supposed to stay inside 90% of the time, don't you think they're going to go back and the market's going to reverse? And we saw that Tuesday, and I'll show you. I need to get AD lines for some divergence inside of Market MRI Pro. That's on my wish list. It's not there yet. I'm sure Praveen can do it because he tracks AD lines, new high, new lows, etc. That 13-week new high, new low that I alluded to, Sager calls it my secret weapon. It is, because it's another thing that when it gets overbought or oversold, the market always goes the other way. I look at how many stocks are above various moving averages, because at extremes, you get the same signal. It tells you the market's going the other way. And then Ian's mumbo jumbo. I've got Eureka, which is his version of a follow-through day with math. Phoenix, which is a follow-through day to the downside. Bingo, the baby out with the bathwater. Bango, people are buying everything. And then the bongo and the kahuna. The bongo I talked about, which is the trending indicator, and the kahuna is a momentum indicator. So there's a lot of things that I incorporate, and they're all going to sit in this chart right here. And again, we'll look at it in the program so you could see it easier. But these little red arrows, or not arrows, triangles here, 2 in a row, occurred right up here at the top, or near top on the NYSE, and the market's rolling over. We'll see if this is real or not. Again, they don't all sell off, but if you look at any of those major sell-offs that I showed you, you're going to see the Hindenburg Omen before it on every one of them, and maybe we'll look at 07, 08 over on Saturday. The other thing I wanted to tell you is there's a unique indicator called the defibrillator. When do you defibrillate somebody? When you think they're dead. So when the market looks dead, remember it's not different this time, it's not dead, the defib pops up and you buy. You don't want to see the defibrillator, because it means that you've been wiped out, or the markets have been wiped out. It's an extreme oversold condition. Praveen put it together, came up with it himself, showed it to me, and I said, all right, make it into an indicator I can put on a chart. So all of that is packed into this bumble jumbo here is stocks above. It should be 17, but right now it's the 20 in green, 50 in white, and 200 in red. And then we've got advanced decliners, or we got new high, new, we got, let's see, new high, new lows. I think new high, new lows on the top, advanced decliners in the middle, up, down volume, and then we have all those Ian mumbo jumbos here and the bongos on top. And then here's bucket analysis. This is the buckets today. Yesterday, and this is the bucket that's below the Bollinger Bands, and this is bucket number 11 above the Bollinger Bands. You could see today the white bar is much lower than the gray bar. And that's because today was a super strong day, and I call this a right shift. We're moving in a more, still bearish looking, but we're moving more bullish. Look, we have green above gray, green above gray, green above gray. And even though these three are more than we had yesterday on these two, and the same yesterday, these had to go somewhere, and they don't move many buckets at a time. So this was an improvement. I call that a shift to the right. And I went on, and I rarely post intraday, but let me put on my glasses because this is fine print. I put out an email to the top-down group and said, hey, 32% of the stocks in the NYSE are below the Bollinger Bands, 35% in the S&P 1500, 28% in the NASDAQ, and the Russell 2000. It actually got worse, and I've got another one. I thought I put the worst one in at around 11. It was like 45%, and that's when I put something out on the top down. Said we've hit a bottom short term and we're going higher, and we did for a while, and we went higher today. So I'm using not tricks, not voodoo, and not magic. I'm using things that brilliant people like Ian, like William O'Neill, Gil Morales, and Chris Catcher, who really is a brilliant person, Mensa brilliant. He's been involved in naming 3 periodic elements, which means he helped find them. Smart people before us have done a lot of work to come up with things that actually work. Why not use them? And then how do I find the best opportunities? I built derivatives of what a lot of smart people have done, and I call them my impulse indicators. This strip here is the key strip. It has something called the EMS trading system. It's a moving average crossover. It has the CPR, which is a totally different methodology of a crossover system. Both of those are trading systems that I used in short-term charts when I was between jobs, meaning I was under non-competes. I use them as signals and scanning tools within the different platforms. You're going to have 4 dots here, which are gaps, volume, breakouts, and Kahuna Force, which is being renamed Momentum. You have the squeeze here, just like John Carter, except I don't do the rate of change. When you come out of the squeeze, you get dots, just so I could scan for the days right when we came out of the squeeze. This is a boring but useful Wilder PSAR. Nothing's changed. And the green candle low and red candle high, as it says up here somewhere, are failed new highs. Stock traded higher in reverse. That's a red candle high. And failed new low. Stock has been in a downtrade, traded down a lot, and then reversed and closed higher. That's a green candle low. Those are reversal signals. Up here is my how do you measure something's extended. Ian taught us about the high jump. I said, wow, I'm going to create the low jump, and then I'm going to combine them in a high-low oscillator. If it's above plus 95, it means you're extended to the upside. If it's below minus 95, you're extended to the downside. Why buy extended? You may, and I may, but I want to know going in. And then this here are things that, a lot of people look at OBV. I learned that from John Person. He didn't create OBV. So here's an OBV on the bottom with a specific exponential moving average. And this, Chris Wilson, who was an HGSIer from Alabama, I believe, still around because he's younger than me, one day he said, Jeff, I put a relative strength versus a spider on my weekly charts. And when that crosses over the moving average, the market always goes up. And I thought, sure it does. And then I played around with it, damn, it's good. So I incorporate that. And it's the relative strength of your instrument versus the spider, and you're looking for it to break above or below the moving average. And then, now I'll go back to my mini-me. This is what we called him when he worked for me. He recently ditched me. Boo-hoo. Um, when I was growing up and I was an intern and a resident and I did internal medicine, we would look at a strip of paper. And that strip of paper would have wiggles and squiggles. And from those wiggles and squiggles, I could get a good idea of the heart health of that patient. Had they had a heart attack? Are they having a heart attack right now? Do they have an abnormal rhythm that puts them at risk of dying? So if I can do that with a heart when it's a life or death situation, can't we come up with a system that we can tell the health of a market through the ebb and flow of these signals? Boring names, because this is boring. What are all indicators created on? Price, volume, and time. That is it. Everything that everybody will sell you, including me, is a derivative of price, volume, and time. Where it closes in the day range is still determined by price, but that's something that's important. Stochastics will look at that. The MACDs are different moving average crossovers. M, moving average crossover. I don't know if it's divergence is the last, I can't remember what the last D is, but it's price, volume, and time. So we all play by the same rules. We all have things that measure the same thing. Make it simple. And then that relative strength in the OBV, Sunday was the Oscars, so I gave it the award for Best Supporting Actors. You don't need me to have that. Just go put it on your charts. They work. We'll go in the program for how we do scanning and filtering to bring the best stocks to the top. And I think that Praveen outdid himself. This is all I wanted, guys. I didn't ask for a whole trading platform. I wanted a simple scanner that would not break down, and then I would copy the charts or do a cut and paste and put them into TradingView. But no, that wasn't enough for Praveen, the outperformer. Praveen built you a whole trading system and a whole trading app that takes everything we've done today and it doesn't automate it, but it makes it easy. So I'm not a counter trend trader. I want the top sectors and industry groups. I want that pullback in an uptrend, and I can use my tools to find it. I want the supporting evidence to say it looks good, and then I want to make it easy and find it with the scanner. This is what I buy. I don't buy it here. I buy it when it pulls back to support. Why? Because I put stops in. I will never put a stop that's more than 8% unless it's a really cheap stock and I have no choice and I shouldn't be trading it anyways. If I know where support is, then I could put my stop 25, 50 cents below that stop and not risk that price and have very little risk. So I'd rather buy it here or when it starts to move so I can put my stop right here, because if I bought it here and it probably goes up anyways, where do I put my stop? Down here? It's too far away. So now I'm just guessing and applying a percentage. I like buying off of support. So in the market today, C. Now this isn't pretty like this, but is that really any different? How many times did it pull back to the 50-day moving average and bounce? It happens so often. Of course, sometimes it misses. It happens so often in the market that we call it free parking. Free parking in an uptrend and then moving up with momentum. And by the way, look at all the bullish dots and look at that celebration of relative strength. You can't see the OBV, but it's celebrated as well. And where did I find this? I did it tonight. I already own it, so I knew it looked good. I ran my scanner, and I'll show you how I did that. It came right to the top. Now, would I buy it here? I might. It's extended, and that's the problem. But it's extended for all the right reasons. It's broken out because of earnings and big revenue projections. I'd rather it come back some. It'll do this again. It'll do this. It'll do this. It'll do this. It'll do this. So wait for it. Maybe you'll pull it back to in this area. Of course, you're going to miss some that get away from you, but there's 8,000 plus stocks. One will be there. So it's going to get better. I'm going to show you fundamentals. We're working on multiple custom watch lists. I've got 3 now. I asked for 3 more. We're going to save your settings in the cloud. So if you build a watch list, if you put trend lines and other things, if you build your own and save your own scans, it'll be saved for you in the cloud so that when you start up another computer, it's right there. If you're traveling, you don't bring your computer, you go down to the business office. It's pretty hard because you'd have to load it on the computer, which is a pain in the butt. But if you did that, you better kill it when you're done, although it has a username and password that doesn't save. Um, you can do it there because your stuff that you do, that you manipulate, will be there. And then I really do like TradingView charts. And one of the best things about TradingView is you've got thousands of programmers like Praveen, some putting free things up there and some not free. But you can find great IBD-like relative strength, which we've now built into Market MRI Pro. But you could find trend lines. There's so many things, Elliott waves, whatever is your flavor. So we wanted to port what you do to TradingView, which we've done. I'll show you what's coming. I want more charting windows. I want my multiple moving average charts. That should be coming soon. We did seasonality in TradingView. We're going to put seasonality in Market MRI Pro. The custom ratio charting, I want another grid of ratio charts to put your own in. I want to look at maybe NASDAQ versus Spider, maybe IWM versus Spider, TLT versus Spider. They're all going to tell me different things. We have the news feed, so there'll be news just like the fundamentals coming. I would like a way to find divergences with a scanner. I know I'm thinking poor Praveen, but I've got code from StockFinder and I got code from other programs that do a really good job at it. Maybe we can figure it out. And if we can, we're going to do it. And then what if you have tools that you like that are not proprietary? What does that mean? Well, you sat at a meeting and you got to look at John Person's stuff and you figured out what the PPS indicator. I'm not programming that in. That's a proprietary indicator. But on the other hand, you created your own indicator. Mike's a smart guy on the call. He's an investment guy. If you've created it, then we'll put it into the program. And we'll even call it Mike's indicator. But we're going to give it to everybody who has the software. We're not going to isolate it. So if you have personal favorites that you're not in the market selling, because we won't put a proprietary thing in without that person's permission, we will build your indicators in. Of course, we're going to have to prioritize. And I'm going to have dinner with that very same John Person on Saturday and try and get him to think about joining with me and creating an add-on so I can combine his stuff with my stuff. And I've already talked to Sagar, and he's not going to give us the code, but he may have given us a path forward. And that's something that Praveen is going to talk to Sagar about and see if there's a way to get some of his trading signals in. As I mentioned, the port to TradingView, we have the same indicators. Now, TradingView has something even better, although something tells me if I asked nicely, Praveen could put it in Market MRI Pro, as TradingView allows you to post different time frames on the same chart. So this happens to be the relative strength versus the spider on a daily chart. And this down here is relative strength versus the spider on a weekly, daily and weekly on the same chart. The fundamentals are something new that was an update or upgrade we did to what we sold. So I'm going to go into the program in a minute. I planned on this being 90 minutes, so I'm still going to have 40 minutes to go through the program, which I know many of you didn't come for me to blab because you already own the product. This is not an indicator, and it's a business difference. A trading app is a full system. It has multiple things I have to pay for, modules, data, DevOps. I've got a support person in India. We have a server farm, a real-time data feed. There's lots of positives to it. It's kind of mine. It's really Praveen's, but we're partners. We can create what we want to create. We can create workflow solutions, and I'm not reliant upon any third party outside the partnership. That is exciting to me. That has a big cost. Forget what Praveen is worth on the coding side, which is a lot, but I've had to write checks for all these things there just to build this thing, and there are ongoing license fees. That's different than indicators. I've sold indicators. Indicators are the best. You code it once, you forget about it. Requires updates when the platform changes, which never happens. There's no ongoing cost, and there's no user support because it's the platform's fault. Some of you got turned on to Roy Kelly by me, and he tried selling me his company. And I remember one day he said, Jeff, you don't know how good it feels. You write an indicator, a bunch of indicators. You advertise them in a few places. You don't do anything else. And like every day you get 3 letters, people want to buy your indicators with a check. That's a great business model, but it doesn't meet my needs. I've already done that. I wanted a full platform that works for me and for the people who follow me and want to trade like me. So the offer for today, and then we're going to go into the platform. You've got a market-ready trading tool and platform. Everything I've showed you so far is included. All updates and improvements as long as you're a subscriber. If I bring in a new educator tool set, it's a fee if they want a fee. If they say, Jeff, it's free, go do it, it's not going to be a fee. Support response within 24 hours. Everybody has my email and Praveen's. It's going to be coming in a second. The data is a real-time data feed. You don't need real-time because I'm an end-of-day guy. What you need are certain things real-time, but what we're doing is we're updating things every 15 seconds, every minute, so it'll look like real-time. It's just not streaming. Streaming is a lot more use of server and bandwidth. The TradingView integration, including my indicators. We have so many indicators that you probably have to have a paid subscription to use them all. Someday when Praveen has time, he'll probably combine it into 1 or 2 indicators so we can avoid the subscription part. I do quarterly training for the owners all the time, and we're going to do one Saturday. And once you buy something from me, you're part of the family. Now it's a messed up family because Van is my partner in TradeStation, Rob Hoffman in my marketplace tools, and Praveen in TradingView. So I only control part of the dollars. So what we did is I've looked at products in the market, and those who know me know I've bought everything in the market, is we're going to price this at $19.99. Those of you that are in my top-down group or who join will get $100 off. I'm giving $200 off for launch, and then I call it stacking discounts. For every one of those 3 programs, which ranged in price from $500 to could have been $1,600 or $1,700 on the TradeStation app, before the integration with Sagars, which was more, I'll give you $200 for each one of those. So if you are all in and you follow me for a long time, you add that up, you're getting it for $10.99. If you don't have anything else, you're getting it for $16.99. If you buy it at $16.99 and tomorrow you decide to buy the TradeStation app, as one of you know, I'll give you a discount on that to reflect a combined purchase. They don't have to be at the same time. Now, those costs that I told you about don't go away in year 2. So there will be an ongoing cost. We projected it was going to be $7.99, and that will cover maintenance, updates, and data. And, we're adults, okay? And many of you have been around a few times. Go find Best Choice Software and go find Magenta Trader and tell me where they are because I can't find them. And the reason with those and others that are no longer available is people are silly from a business model. They'll say, give me $5,000, I'll give you lifetime access to the program. Give me another $2,000, I'll give you lifetime data. Okay? And then what happens? After the first year, they have no money coming in. After the 3rd or 4th year, they're in trouble, and then they go out of business. We're not going to do that. So I'm going to drop it to $5.99 for updates of people that buy it at the launch time. And what I said on Sunday, I'll say again. We're not giving this away, obviously, in the first year. On the maintenance, I'm not here to rip anybody off. If I get 25 people that are renewing into the 2nd year, and believe me, I've got low expectations. We might have hundreds. Then I'll drop it down probably to $4.99. And if I get over 100 people renewing it for the second year and beyond, I'll drop it to $3.99. Why? Because every user doesn't add an equal number of costs. So I will scale the cost down based upon the number of people. So I'm not here to do bad things. I'm here to help. No refunds after first 72 hours. Most people don't give refunds. I will tell you, after the webinar we did on Friday, we sold a bunch, and most of them were beta testers. That tells you something. They're probably not going to ask for refunds, that's for sure. There are no guarantees you'll make money trading. You can review the ability of my tools to find good stocks by watching. I've got hundreds of videos out there. Your actual trade performance will depend on how you trade them. You could be great at picking stocks and horrible at managing your money. And we're going to do our best to have platform functioning fully 24/7, 365. We're reliant on outside data vendors and servers. We have redundancy on the servers. We've never really, I don't think I've gone to bed maybe once since we started working with this months ago where it wasn't working when I went to bed. And that was before I had a support person beyond Praveen. So I think we'll be fine on a from an SLA of having the thing up and running. I already mentioned my Google group. How often do you get to join a free group and you get a discount on a product just because you joined? So I'm paying you to join. Orange County meeting is in June 6th through 8th. It is a great meeting. It is 3 days. I'll speak 50% of the time. We'll have 3 or 4 other speakers. Some will be proprietary. Some will be just good traders. And Jim and some of you have been to those. It's the best bargain you're going to get, except for something we watch for free. So you'll get access to this. I'm going to certainly post the video, and I'll probably post the slides online tonight, certainly to the top-down trading room, but also to YouTube. Coding at Market MRI Pro, that's Praveen. Market MRI Pro at Gmail, that's one of my 8,000 emails, which makes it a pain in the ass every time I change phones. Consider joining Top Down Trader because you'll get things like It's Time to Buy that I put out yesterday. And this, I shouldn't say Sunday night, it'd be tonight on the video and the slides. If you want to purchase, we're going to go into the program for the remaining 33 minutes. Send me an email. I can't send you a link. Why? Because I don't know what you have. Send me an email and say, hey, I have your Wealth Charts Marketplace package. I bought your TradeStation app from the Vans App Store, and I want my top-down trading discount and my launch discount. Well, that's 2, 4, 6, 7. And I'll send you an invoice for $12.99. If you don't have any of them, I'm going to send you an invoice for $16.99. And if you have them all, I'll send you an invoice for $10.99. I'll formulate the price. You'll get an email tomorrow with an invoice from Stripe. Lots of different ways to pay. I built it in so they hold the money for the 72 hours, so you don't have to worry about me going away and not paying you if you decide to change your mind. And all these emails work for me and about a dozen more. Jeffrey.scott@marketmripro.com, marketmripro@gmail.com, and my old standby hgsidoc@gmail.com. Let's go look at the program. I'm going to start with MAGs because I thought this was a fascinating chart. Why do I think it's fascinating? Well, you think about what led, or what CNBC wanted you to believe led the major market rally that we went through in 24 rather. 24 was a great year. 23 was a great year. 22 sucked. And just go look at the performance of the indexes. There was a long time where the market did not go up. Well, the MAGs have pulled back. And if the 100 is free parking, the 200 is a really strong area to buy off of. So I saw that and I started nibbling a little bit at the end of day today, and I will probably nibble some more. The MAGs are those big 7 stocks. You know what they are. I don't have to go through them. They've been beaten down. But if this market goes higher and we get a rally, maybe those MAGs are what works. Now, this has got nothing to do with how I normally buy things. Why? Because the daily and weekly bongo are still red. The high-low jump went from oversold to not oversold. You only got one blue dot, which is the CPR, which can be early, and the relative strength and OBV have not confirmed. I think the smarter part of valor is to wait. I drew this line on the chart because this is where we traded up to in July, and you can almost imagine sort of a cup and a handle here, maybe a double handle or just a big cup and a handle, and it broke out and it had a big run up to, the high on this candle here was 58.69, and the breakout from this line was at 48. So 10 points, 20% move in a short period of time. Well, look where that is. We broke above that line today. I am not against buying here, putting my stop at right below that 200, and I'm risking $1.60 thereabouts on a $50 stock. That is a little bit over 3% risk. And it's not because it meets my criteria. It's one of those I can't help myself, because I don't believe the mags are going to stay where they are. I think that if the market rallies, they're going to rally too. But let me show you real time how I do it. Let's pretend it's 6 o'clock or 6:04. And that's when I want the data updated. The data is good at 4:05, but some of the things like the market breadth require a batch update, and that won't be done probably. Today it was done for me before 7. If I had it before 6, I'd be really happy. And maybe we'll be able to get that done earlier. But it's 6:04, and I just opened up the computer. I am first going to go to either the timing brief or the daily brief. Let's go to the daily brief first. I've been working my butt off, especially since my mini-me quit, and I have all this more work I have to do, trying to make him feel guilty. That sure as heck won't happen. I'm sure he's going to give me shit tomorrow from picking on him, but that's okay. I miss him. And I look at what did the market do today. Now, intraday, I can hit refresh and it will update in about 3 seconds. Why do I need real time when you're not looking at it all the time? It updates in 3 seconds or less. It shows me the Qs were up 1.3, the diamonds were up 1.15, the SPY up 1.07, Russell up 0.99, and the VXX for volatility was down 4. That's good. We're going to add Bitcoin, and we're going to maybe put TLT, and I gave him one other one last night. I can't remember. Maybe mid caps. But we can add a couple more. We have room here. This line is important. This is telling me between the high of the day and the low of the day, where did we close in the range? Notice they're all above 84 and above. That's a strong day. We finished near the top of the range. Gives me a little bit of conviction for tomorrow. Then I go over to the NYSE and the NASDAQ, and I'm looking at the new highs minus the new lows. They're all negative. I look over here on the NASDAQ. They're all negative. That's not good. That tells me we've been going down, and we didn't switch the going down in that today. And why does that matter? Because bull markets are built on new highs, not on new lows. So that will be something to temper my enthusiasm tomorrow. Sager has used a lot of my stuff, and I really loved what he did on the S&P 1500. And he would look at the S&P 1500 in his Q-Edge tool, and he would tell you what percentage of the sectors are up today. Well, I'll tell you it was 82%. Bullish day. What percent of the industry groups were up today? 81%. What percent of the stocks were up today? 73%. This white line here at 0 tells me there were no sectors positive yesterday, and that industry group's positivity was about 12%. I think that tells me a lot about the strength of the market today versus yesterday. The number of stocks that are up versus down tells me a lot about the strength of the market. We'll leave the above the midline for the Saturday call. But not only can I do that in the S&P 1500, think about this. Combination SP 500 large caps, 400 mid caps, and 600 small caps. It's a great index. I know why he uses it. The NASDAQ. that's a different index. It's a lot of tech stuff, biotech. So I could look at how this is doing, and I could see how it compared. And then the NYSE, think banks, energy, gold. So you cover different aspects of the market. And then the last piece that I'm checking constantly during the day is this piece. And I'm looking at ranking by 1 day change, winners versus losers. Now, the top batch is just looking at the 11 S&P 500 sectors and their performance today. We were led today by materials, followed by industrials and discretionary. Rotation into some of the things that recently sold off. Here shows me that where they closed in their range, and you can see pretty much, even though energy was down and utilities were down, they both closed above their midline in their closing range. It was a very strong finish on the market today compared to the finish that we saw yesterday. So this gives me a sense of what sectors are working. It's one of my tools for sectors, but I can shut that down or leave it open. I built 41 different ETFs here. I didn't build them. Praveen built the tool, but I wanted to be able to see what's working. Well, cannabis, there was some talk about Trump and legalization of cannabis. They still can't use the banking world, interstate banking. Copper was strong, China, blockchain, silver. Watching this real time, I get a sense of what's working in the market. So to me, this is like that spreadsheet, except it works. It's better than that spreadsheet. And if we have any black space, we can add. So I think we can add a few more of the ETFs. And we can probably add a couple up here on the major model for the major timing evaluations. So we'll be open to suggestions on that. I gave a couple of mine to Praveen yesterday. Now we'll go to the timing model, and this is real-time updating. So this is the weekly. This is the 13-week new high, new low. It is not down to the certainty reversal zone. You can see how far this got, and the market went higher. You could see it came down, and the market went higher. Didn't get that far, and the market went higher. We're not there yet. We could be there in 1 day. We're pretty close on the Qs. All right, and then remember the weekly bar doesn't close until the end of the day on Friday. Then I'll go look at the daily charts. And what do I see on the daily charts? Now, I don't think this update has it, but we found a bug on the daily 13-week high-low, and it will be fixed in the next update. Right, Praveen? Maybe stepped away. Yes, thank you. I love support and resistance. I like when I see a false breakout, I know we're coming down. I had a false breakdown. Are we going up? Here was a false breakdown and we went up. So we're in a trading range. My guess is we're going higher. And we'll talk more about what my target is in a minute. The Qs are in a Darvis box. And false breakdown, I think the Qs are going higher. The Russell, that's a reversal. Maybe it's going higher. And the Diamond had a reversal today. Now here's my problem. All the dailies are still in sell. So let's rewind about 30 minutes. I've had an attempted rally day in cancelim speak. All right, that's a good sign. I have no evidence that this is real. Could be a 1 day and go down tomorrow. I don't have that follow through day, so I have zero conviction to spend my grandchildren's inheritance and be chasing a lot of stocks tomorrow. But then I can't help myself, which says to me, I bet we bounced and we're going to run up a couple days. Maybe I'll put on a position. Maybe I'll buy those mags, some more. Maybe I'll buy some TQQQ that goes up 3 times what the Qs do. But I'm buying a counter trend. I'm buying in a market that says it's still going down. So I might be putting on little positions that I'll add to if they go up, or I may sit on my hands. If we have a really strong day at the open, I'm probably more likely to be nibbling. Let's say on Tuesday, let's say Friday, Thursday and Friday, we got more employment stuff. We got Powell speaking Friday. The market does nothing the rest of this week. and Monday it trades down a little bit, and Tuesday we have a big up day like we had today. There's my follow through day, and I'll probably start buying at the end of Tuesday and be ready to buy on Wednesday. And I'll be ready to buy with some conviction. I'm not there right now. I'm not there. Why? Because all my timing models tell me sell. So my objective model says don't buy. And let me tell you a little secret, mini-me. You don't have to be the first one in. That when this market decides to stop going down and rally, just like it did in 2008, just like it did in March of 2020, you had a long runway to make a ton of money. When I go in early, I get chopped out all the time. When I wait longer, I get to ride the trends. I can't help myself, and I'll take small positions. So that's that model. All right. Then I'm going to let's look at the charts. All right. We've been doing this for 9 minutes, and I'm talking more than I would talk when I was doing the model myself. So we're going to load the indices. Now, there's a couple things that have got to turn on. These are not turned on, the weekly and monthly. You can look at these in other windows that are turned on, like the timing, and also the drawing has to be turned on as well. They're all in there. We just have to turn them on. We just came out of beta. So the spider, here's your trading range. Does that look to you like it's going higher or lower? Well, my opinion, just my opinion is, despite the fact that I don't have a clear-cut buy signal yet, you had a bounce at support. Okay, support here, resistance we thought here was resistance here. So you had a bounce at support, which is right above the 200-day moving average, which is a common place to bounce. And so what I don't know, and why I wish I had the drawing tool here, because I'm going to mess it up when I do this, but you see, nope, I don't have it activated. Never mind. What I don't know, here it is. Hold on one second. Are we going to, I highly doubt it, but that's the high road scenario. Am I going to do this? That's possible. That's the medium scenario. Or am I going to do this? Believe me, that is more likely than that. So I am going to play, and that 50 here is going to be resistance. I'm going to play for this and then let it build a base to go higher. But I'm very aware that this is just as likely and maybe the most likely. So I'm going to be very careful. So yes, we look great here. And by the way, I always do the high, medium, and low road scenario every time I look at a market. I did it on Sunday. So we got the low road. Let's see if we bounce. I think we're going to bounce here. All right. Now what did I do wrong here? Let me hit escape and see if that does it. Oh, I have to turn off my marker. See, I knew I'd mess up by turning that on. All right, so let's turn that off. Let's look at the Qs. Same story. Massive uptrend. 200, 200, 200. It's been support the whole way up. Where are we sitting? We're sitting on the 200. What's it likely going to do? It's likely to go higher. What is my three road scenario? High road. I would love it because my long-term stock positions are still long. Low road, not so good. Most likely we run up to this area here where the 50 is, and then we do that. That's one scenario, or we run up to that 50, reset, and then go higher. I think we run up to the 50, and I'm willing to play this bit right here, and that's what I'm thinking we'll do. But what do I know? I'm a cancer doctor. I'm not a market technician. What about the diamonds? Diamonds, the ugly one, they broke through trend line. They broke through a trend line that goes all the way back here to August of 24. The longer the trend line, the better the trend line. Doesn't have a lot of touches, but that was significant to me. Hasn't broke through the 50. and the distance through the 200 rather, and the distance here to the 50 is not very big. I'm a little bit more worried about the diamonds. It's only 30 stocks. Who cares? Well, the markets care. And then we can look at the Russell. And this has been the weak sister. And you can see that the Russell is coming out like it's squirting through a water pipe. The Russell, this was 2021 highs, if I remember correctly. Remember I told you 22 is ugly? This is 22 in small stocks. 23 and 24 were great. You kind of got a double top here, don't you? How ugly is that? My guess is I would not be, let me bring it back to where I want it to be. My guess is that we run into the 200 and fail. Now, if we break the 200, then my hypothesis is up and maybe we go a lot higher. But typically, you broke it, you're going to retest it before you go higher. So what's to be bullish about? The problem is our president, and I'm not anti-Trump. I don't love him, but I'm not an anti-Trump person that's, that is crazed about it. But you never know what's going to happen. The market hates uncertainty. Here is the VIX did on Tuesday. Here's it on Wednesday. This was a bottom. December 24. That's a bottom. This may have been a bottom too because we broke all these highs here. So that is supportive that we might have a run up. And then lastly, the dollar, if you want your stocks to go up, a weak dollar is good to a point. You don't want a weak dollar because the country is in a horrible recession. And you can see the dollar has dropped significantly. It was down 1.1%. So if the dollar's weak, then I could predict in advance that my commodities were up. So my commodities are the next one. All right, we're now at 15 minutes. Gold was up here. It was up today. It was up 0.42. Silver was up a lot, 268. Oil that is a classic candlestick, a classic hammer candlestick. That is typically a reversal candle. So oil is probably going higher tomorrow. It was down on the session. It's pulled into an area it's bounced before. Natural gas, if you watched any of my videos, how many times did I have fun by blowing up natural gas and showing you how many times it failed at the 200 and said it's going to break above the 200, it's going to retest, and then it's going to go up to a big move. Well, it's exactly what it did. Am I that smart? No, I'm not that smart. I've just been doing it enough times. And I learned from smart people. The same thing, it's never different this time. It's never different this time. No one knew when it was going to break above the 200, but when it did, we knew it was going to come back. It's going to retest, and then it's going to run. 10-year and the 30-year. Both were up 1.31 on the 10-year, and today on the 30-year up 0.89. That might be a good thing. That's counterintuitive, but I think some of the drop that we've seen over the last several days has become because of tariff mania and the concerns that those tariffs would cause a recession. If you think you've seen bear markets and you haven't lived through one in a recession, you have no idea. They are much worse in a recession. The buckets we looked at before in the stock don't have to spend much in the slides. I don't have to spend much time with the buckets live. Let it build. Notice the magic refresh button. I want this on every window that updates during the day because once it loads, it refreshes very quick. There's a lot of stocks that are being calculated here. And as we showed you, the numbers have come down considerably today. 14 below, 13, 15, and 18. Look in top-down trader, one of them had 45 below in one of these two. So we had a right shift rather, we improved. We looked at the market breadth, so I'm just really looking at what's down below, see if any new signals popped up. And nothing new, no surprise. We know this stuff already from the other charts. This here, look at this. When the stocks below that 20 got really low, we reversed. We reversed. We reversed. I think we're at the same level that we reversed every time. More reason to expect a reversal. Again, we have been beaten up. I don't expect a reversal to new highs. I hope we get one, and I got to be aware of it and prepared for it. I just don't think that's what we're going to get. The ratio charts, I love them. I do these in wealth charts, and both wealth charts is really easy. Praveen seems to have convinced me it's going to be easy here. I want the things up at the right upper quadrant. I want it up here. Communications is still super strong. So this is a ratio chart, except for this one. That's a ratio chart too, of the S&P sectors versus the spider. So communication super strong, discretionary still weak. Staples was leading but rotated a little bit out. Could have been profit taking. I'm not done with them. Industrials maybe starting to make a move. Healthcare ran up with Staples, a little bit of profit taking today. Financials more than profit taking. Take a look at Bank of America, JP Morgan, and KKR. Something's ugly in financials. I haven't figured it out. Energy is weakening. It's going to bounce maybe in oil tomorrow with that hammer. No guarantee. But if you're a betting person, it's going up tomorrow with that hammer. Maybe energy will follow. Materials up. Why? Because copper is going up. Steel is going to go up. Tariffs. Materials love tariffs if you want to look at their stock prices because their revenue is going to go up. Until we don't buy anything because of the recession or depression, then everything dies. Real estate's kind of like Staples, big run up, gave up a little bit of rotation. Technology is like flipping this chart. It's been killed. You had a little bit of a bud of hope here for tech. Maybe nothing happens, and utilities like Staples ran up and gave up. I just looked at the market by sectors and learned a lot. 2 seconds. I am now at 20 minutes. And believe me, I'd be at 10 if I wasn't blabbing. Let's look at stocks. So, are we going higher or lower tomorrow? I'm cautiously optimistic that we're going higher. I am not going all in by any means. I may or may not put in an order. I'll probably nibble on some max. Now let me tell you about how I put my orders in. This is Jeff Scott's philosophy. You have your own. And let's pretend we're looking at max. I don't buy it unless, since I'm working, it trades up above the high of the day. So I might say if the stock trades, what the high was 54 on this day was, I love how Praveen did this, 50.36. So I would buy it if it goes to 50.51. Okay? That would be the only time I would buy it. If it gaps up because the Ukraine war is over, then I'm not going to get filled. If the market takes a dump because a new tariff is announced, I'm not going to buy it because I won't get filled. But if the market trades up in an orderly fashion, I'll be filled at the open, or when it gets above my level or goes through my level. Where am I going to put my stop? Well, I'm going to put my stop below the lowest of the last four. And that would be this bar, which is at 48.12. But really, if it breaks below the 200, I want out. So the 200 is at 48.75. So maybe I'll put my stop at 48.55 or something. So I've got 4% risk, and I go to sleep. Tomorrow the market opens up. I might get filled. I might not. Market takes a dump. I don't get filled. The only way I get hurt is the market opens up and dies. Well, since my stop is put in at 4% loss, I can only risk 4%. So that's how I would look at it. I buy it if it moves up. I immediately figure out what my stop is, and this is only the first of my position. And what's my target? My target's going to be the buy minus the stop, probably times 2. Something that gets me up into this range might be my target. So I would put a target on somewhere up here because I think by the time I get there, the 17 and the 50 are going to catch up. It's also where we had resistance here. And if I get here, maybe I'll take off part of my position and let the rest run in case I get that big breakout. I am very prescriptive of how I take a trade. And so one of the things that worries me is I do my programs and I say I'm going to buy this stock, I'm looking at this stock, but everybody buys it differently. Everybody has different targets and stops. All right, so top down, I go into the top down bucket. Here's a list of the sectors in the market. Here's a list of the industry groups. I can rank them by percent change, or I could rank them by 2, 5, or 13-day momentum. Um, let's use percent change for the sectors. What comes up to the top is basic materials. Over here are the industry groups, also ranked, not yet, let's rank them also by percentage change. And what comes up to the top is distributors, chemicals, copper, silver. What I could do is I could identify 3 sectors and then have all their stocks pile up here and look at the top ones. But let's take the top 10 industry groups. 2, 3, 4, 5, 6, 7, 8, 9, and 10. And let's add gold because I like gold here. And now here is a list of 145 stocks. I'm going to go here and drop down my filter. I only want stocks that are above $5, volume greater than 500. I want their price above the 200 MA. I want their weekly bond go up, which means they're in an uptrend. And I'm looking for one of my many triggers. This is my favorite trigger, the momentum trigger. And nothing is there. Okay, kill the momentum trigger. See, I only had a small number that made this, so we could go look at these. AEM. Let's let it load. For reasons I never understand, the first one takes the longest. So AEM looks great. Broke out of a flag today. Let's look at AGI. Another gold breaking out. Let's look at AU. Another gold pull back and breaking out. Let's look at Dana Corp. This is, I think, auto parts. Pull back to the 50. Less exciting than the others. DRD. Another gold stock breaking out. Equix. Gold. Franklin, Nevada. Gold stock breaking out. Goldfields. You getting a hint on gold? Garrett Motion. Don't know that one. I don't like that one as much. HSAI is a consumer. Well, I don't know what this guy does, but wow, look at this move. A pullback to free parking and a gap up today. It had a momentum dot, a CPR signal, relative strength and OBV are turning up. That looks kind of good to me. I don't know this guy from Adam. I might want to do some work and check this guy out. Did it just have earnings? I'll flip up here. Earnings are due March 10th. And I don't like it as much anymore because I have to deal with earnings risk. But I'm probably going to do some research on this one later and try and figure it out. I pay a lot of money for a couple of research services, so I'll go look at some analyst comments and see what they think. ICL, don't know this one either. KGC, I think this is what we talked about yesterday, wasn't it? It was. It's what I did in my, either on my Sunday video or Monday video. I said, I like Kinross Gold. Why? Because yesterday it broke above the trend line. Today it broke out. LKQ, auto parts. We have an auto aficionado here. I don't know why this is doing good. It probably has something to do with the tariffs not coming on. MP, basic materials, metals. NTR, Nutrient. I'm not ranking these by anything except alphabetical. Orla Mining. I've got a silver stock. So you get the hint. I can scan for the things that I like, and if I get a small enough list, I can just go one at a time. Or I could have tried another one of my trading systems. Let's look at the multi-time frame CPR buy. Okay, that just made it even smaller, and every one of those looks like it's a metal stock. I don't know HSAI. I love the pattern. Doesn't mean I'm buying it, but I love the pattern. It's worth doing a little bit of research on. Hopefully someday, just like I do this and I get the earnings, I'll do this and I'll get the news. I know it's coming. So that's how I would refer to as a top-down approach where I looked at the leading sectors. All right, it is just come out of beta, so my apologies for that. I have problems getting the industry back. We had that problem the other day, and I'm waiting for my good buddy Praveen to give me the update that has fixed that. But we'll bring it back up. And we'll go back in there. I've just assumed I cleared out the industries and sectors. The last thing I want to show you before I say goodbye, and I've gone too long, here's the 3461 stocks. Those are in the impulse on the JAS group. The JAS group equals NYSE plus NASD plus Amex, pre-filtered at $1 and 100,000 shares. We're going to run that filter every weekend and repopulate the list. So the number will get higher and smaller based upon what the market's doing. There's no way I'm going to look at every one of them. But what was that HSAI? Is that what we were looking at? I want to find HSAI. It's going to take me a little bit. This is not how I recommend doing it, but I don't know. There's probably a better way that I don't know, but let's just look for HSAI. And I want to show you some things that are up here that I think are really dynamite. Not that you don't have to look at the chart. Here it is. HSAI. It tells me the price, the net change, and the percent. Big deal, everybody will tell you that. How many of my impulse dots, of those 4 dots? Volume, gap, momentum, and breakout. No bearish dots. The daily bongo's been red for 5 days. That's your pullback. Your weekly bongo is been positive for 30 bars or 30 weeks, a long uptrend. These are the 3 momentum numbers that are short, intermediate, and long. It's a way of ranking things. Relative volume, how did today's volume compare to normal volume? Wasn't big volume, which is bad. OBV is still below the moving average, and it's been 4 days below. Hopefully it's going to turn positive tomorrow. And the relative strength on the daily flipped today. That's why it's green and a 1. And the relative strength on the weekly flipped 16 bars ago. And since we're looking at a daily chart, that would be, I think, 16 days. So without even looking at the chart, there's a lot of information in this. You can search or scan on any of those. But I'll typically go in here and I'll do exactly what we did, but I'm not pre-filtering by any of the industries. Above the 200, volume greater than 500, price greater than 5, and the weekly bond go up. Hit OK, and I am down to 423 stocks. You can always get a sense of how the market's doing because that number will be up to 2,000 when the market's doing great. And then I'm not looking at 423 stocks tonight. I'll start with my 2-day momentum. Since I'm thinking bullish, short term, ASTS, uptrend, pullback, breakout, pullback to the 50 and a new breakout. I think that one looks kind of interesting. I look here, earnings came out on the 3rd. There's a defect here, hate to use that word. It went from a 35-cent loss in March to a 12-cent loss. That's a positive change, not a negative change. So that's one of the things that's in the next update. It had a negative surprise, so the street was expecting to better. That's not great. And I don't have the revenue change here. It may not have been released. Now, what we could do is to say, all right, Jeff, close that. Let's go look in TradingView. ASTS pops up. We're going to get the TradingView fundamentals here. TradingView says 49% change comparing the prior, in this case, April to this one. The revenue went from whatever that is, millions, nothing, from 5 cents to 19 cents, which was a big change. You look over here, you see things like multiple, but you also see 52-week highs and lows. And we've sort of, when's the next earnings date? What's the earnings expectation? Here's your forward multiple. I mentioned Costco. I love the stock. I love the stores. If I had a gas car, I'd love buying gas there. Forward multiple. Where is it? 254.6. It doesn't grow except once here more than 20%. I just have a hard time. I just think when that goes, the market goes. The market loves this company, and it's a great company. It makes no sense to me, but what do I know? I think this looks kind of interesting here. I see all the blue dots that came in. BZ is a Chinese, I think, internet or something. I don't remember what they do. Let's see if the fundamentals tell me anything. It makes money. It's had great revenue growth. Not so good on here. 1, 2. Yeah, it didn't grow much. On the earnings side, revenue didn't do so well. They had a big hit. which I don't like, which probably explains the pullback. So I'm done with this just by seeing that drop in revenue. If I hover over that, it will show it. When I stop hovering, I like to leave it, so I click on it, I unclick it. The export to trading view is the TV. Get it? And then over here, there, the third one there is C, which is where I started with. So I wanted to make a tool that with me blabbing in 33 minutes, figure 12 minutes at least of blabbing, so just over 20 minutes, I've looked at the market, I looked at the industry groups and sectors, I identified that gold looks really good from a top-down perspective, and then I looked at from a bottoms up, and I found a couple of things I like. I still want to go look at that first one because the chart pattern was just incredibly interesting looking. And that's what I built. That's what I had Praveen built. Remember what I said a few minutes ago. All I thought I was getting was the world's best filtering and scanning tool that does it on a server, that I don't have to run 42 scans and have my TradeStation turn off 3 times every night and have to reboot. This is done almost on new time on a new refresh constantly during the day. So I don't have to wait to the end of day. The only reason I have to wait to the end of day is for that market breadth slide, frankly. So that's the tool. Let me just go back to the most important slides, which are how do you get it if you're interested. Again, just to review, it has a list price of $19.99. Everybody here, assuming you're smart enough to go to Google Groups and sign up for Top Down Trader, can get $300 off. And I may extend it beyond March 10th, but that's still a few days from now. That brings it to $16.99. Jim, you've got Marketplace, I think. You got the TradeStation app, and you got the Trading View. So someone like Jim, you're going to pay $10.99 because you bought everything from me. Why am I going to double dip you? Not my style. If you don't have these others, and one of you didn't, I'll give you a discount on those if you buy them in a relatively reasonable period from now. After the first year, it'll be no more than $5.99. And think of that $5.99 as an insurance policy to keep this thing up and running. No refunds after first 72 hours. I'm not too worried about that. How do you get it? Send me an email to any email address that I have. Tell me that you want it. Tell me what you own, because I don't remember what everybody has. Take a picture of the marketplace, or give me a good story that you don't subscribe anymore, and I'll trust you. I never get emails or anything when I sell that. Take a picture of the TradeStation app, and then I'll know how many discounts to give you. And just tell us you have TradingView indicators, because since Praveen and I sold them to you, we kind of have a list of those people. I'll formulate the price, send you an invoice from Stripe, and then hopefully Praveen will be able to keep up with the demand, and hopefully you got the ones that bought on Sunday out. It took me to last night to send out the invoices. Because every price is different, I can't just give you a link. So I get to build you individually. I need to know your address for tax purposes. Why? Because I think if you're in Florida, I got to pay taxes. I'm not sure anywhere else, but the program asks for it. Your email address that you want to be linked to the program, and that's it. So I'm tired. My wife's going to get mad at me because I promised to watch TV with her 11 minutes ago. And Mini-Me knows my wife. I don't like to mess with her, make her mad. Any questions that haven't been asked yet? Now, if you've got the chat open, you could see that Praveen has mentioned things that I could have gotten that HSA out quicker. If I haven't done it before, I haven't looked. Let me show you something else on the hot list. If I want to import stocks, import from a file, I just have to find where my files are, and I keep everything in drop boxes. It's just the way that I organize my life, except at work where they say Dropbox is too easy for criminals to break. And there it is. Let's say I want to import my high relative strength leaders. Double click, wait a couple seconds, take a drink of water because there's about 300 stocks there. And now my list is here. I want to dump this list to a text file. Right click on it, copy to clipboard, and I can take these and put them in another program. TradingView, I don't need to. It's done automatically. So that's the deal. I appreciate everybody being here. I don't think I said anything horrible except to Mini-Me. He's used to that. So I'm going to probably stick this on YouTube and see if I can't grow the interest in this. Saturday, 10 o'clock to 1 o'clock, we will do a very deep dive where everything came from. It'll be a lot of what we covered today. Those that did it in January, I thought that was a great session. I'll talk about the TradeStation app. And of course, if you're going to ask, and people always ask, do I still use the other tools? I do. And my favorite tool is the size market MRI Pro is this one because this one combines my goodies with Sagar's goodies. And then I could do a filter and I can open and I could look for pullback in uptrend with a Q breakout. And these will always are interesting stocks that will pop up if any. And I could go, there's that same MP that we found. And here's the breakout from its trend line. So, or resistance line. JD is one I like a lot, but it's got earnings tomorrow morning. We'll see what happens at earnings. But there are many ways of working with the markets. This is a great tool. Now, Praveen is going to be tasked. If he can do what Van did and pull these into the program without having to get the code, then we may actually be able to duplicate this in Market MRI Pro. It's going to take a while. So that's it. I'm tired. You got to be tired of me, especially those that did it. Some of you don't have the tool yet. Email me if you want it. I'll send you an invoice. And either way, come see us Monday, and we'll have plenty of time for Q&A. Thanks everybody for being here. And since I think I got all the questions, super special thanks to Praveen. Take a bow. Imagine he was just sitting in the audience and listening to me, and next thing I know, he built this. So you all have a great night. Thanks again, and hope to see a lot of you on Monday. Goodbye.